Hey people, I welcome you back to yet another video in which we are solving previous year sample question paper questions from dissolution of partnership firms. And today I have a question, a journal entry based question from the All India paper of the year 2019. This question was asked as a 4-mark question. Let's go ahead and read the question and solve it. Ankit, Bobby, and Kartik were partners in a firm sharing profits and loss in the ratio 4:3:3. The firm was dissolved on 31st March 2018. Past necessary journal entries for the following transactions after various assets and liabilities have been transferred. So we only have to settle the liabilities and realize the asset. This is a beautiful question. Let's look at it. The firm had stock of rupees 80,000. Okay, so the firm has stock of 80,000 rupees. Ankit took over 50% of the stock at discount of 20%, while the remaining stock was sold at a profit of 30% on cost. Now it looks all confusing and everything. Am I right or not, my decision? But you don't have to get scared when so many numbers are there in one simple sentence. Just try to understand what exactly has happened. What has happened? Firm had total stock of 80,000. So 80,000. This 80,000 has been divided into two. What? 50% of the stock was taken over by Ankit and remaining 50,000 was sold at a profit. Am I right? So 50% of the stock is how much? 40,000. And remaining 50,000 is another 40%. 50% is another 40,000. Ankit took over this 50% at a discount of 20%. So what is the discount on this? 20% of 40,000 is 8,000, and therefore Ankit took over the stock at 32,000. The remaining stock was sold at a profit of 30% on cost. Am I right? So what is a profit on this? 12,000. 30% of 40,000 is 12,000, and the amount for which it was sold is 52,000. Understood or not, my dear children? So all that we have to do now is pass the journal entry. When a partner takes over an asset, whenever an asset goes out, realization account will be credited, and partner takes it over. The liability of the firms towards a partner is reducing, and therefore partner's capital account will be debited. So Ankit's capital account debit 32,000 to realization account 32,000. Ankit took over stock. And the second part of it is we sold the stock. Whenever we sell the stock, we get money in the bank, and therefore bank account will be debited. And whenever an asset goes outside the business, realization is credited. Am I right? So it's because it's an income for the firm, and realization account is a nominal account. So it will be credited. Nominal accounts are credited with income. Stock realized. For how much did we realize it? We just computed it, right? 52,000. So 52,000. That's it, my dear children. Instead of passing a journal entry like this, you can also pass one single entry for this. That is, instead of doing this, you can also pass one single entry like this. You know that Ankit took over a certain part of the stock and remaining was sold. So Ankit's capital account debit. He took it over for 32,000. So 32,000. Bank account debit. The remaining stock was sold for 52,000. So 52,000. To realization account. Which is 52,000 plus 32,000. 84,000. Stock realized. So you can either pass the first two entries or you can pass one single entry like I have shown here. It's your choice. You can do whatever you want. Understood? Second one, a liability under suit for damages included in creditors was settled at 32,000 as against only 13,000 provided in the books. Total creditors of the firm were 50,000. Again, it's a case where they're giving a lot of numbers and trying to confuse you. You don't have to get confused. Am I right, my dear children? What has actually happened? We have settled creditors. That's all. Am I right? So the total creditors here is 50,000. Out of that, 13,000 has been settled at a certain price. A liability and a suit for damages included in creditors was settled at 32,000. But its original value was only 13,000. So how much are the remaining creditors? 3,000 minus 13,000, 37,000. What happens to the remaining creditors? And the question is silent about what happens to a liability. We're supposed to assume that the liability was settled in full at the full book value. Understood? The remaining 37,000 would have got settled at 37,000. Understood or not, my dear children? And therefore, this will be 37,000. Now we have to pass a journal entry. Again, we can pass this as a single entry or no, this will pass it as single journal entry only. Understood? So the journal entry here would be settling a liability. So whenever we settle a liability, realization account will be debited and money is going out of the business and therefore bank account will be credited. How much is it going? How much is going out actually? For the 13,000 creditors, we paid 32,000, remaining 37,000. So totally 69,000. 37,000 plus 32,000. That's all, my dear children. So when we are dividing and giving, like part of this was done in this manner and part of the remaining was done in that manner and all those. You also divide it. Like a chart, small chart, divide it and then find out how much money went there. And then you just pass a journal. Understood or not, my dear children? Creditors. Alright, so they've asked two difficult transactions in the first two. Let's see what they have in the second. Bobby's sister's loan of 20,000 was paid along with interest of 2,000. It might be Bobby or it might be anyone for that matter. It is Bobby's sister, the partner's sister. So it's a third party liability. So basically, there is a third party liability for 20,000 rupees for which you paid 2,000 extra interest also. So you settle that liability for 22,000. Understood or not, my dear children? Whenever you settle a liability, what is the journal entry, my dear children? Whenever you settle a liability, the journal entry is realization account debit. Two, if you're paying, then it's bank, or it is, if a partner is taking over, it is partner's capital account. Understood or not, my dear children? In this case, it has been settled. Bobby's sister's loan has been settled. Am I right or not? So, Bobby's sister's loan settled now, any liability settled will be debited to realization account. So realization account debit to bank account. Bobby's sister's loan settled. How much did we settle? We paid 22,000. We are only bothered about how much money we paid for the liability. Understood? We are not bothered about the book value of the liability. We paid 22,000. So I'm debiting and crediting 22,000. Understood or not, my dear children? And then we finally have Kartik's loan of 12,000 was settled at 12,500. Oh my God, what am I supposed to do? All this question will come up, but it's actually very simple when you look at it, my dear children. Partner's loan is not transferred to realization account. It is paid outside of realization account. Okay. So whenever a third party liability is settled, we debit realization account because it has been transferred to realization account. But Kartik's loan is a partner's loan. Partner's loan is paid outside realization account. So that has not been transferred to realization account. And therefore, the liability that is getting settled is Kartik's loan account. So a liability settled, the liability account will be credited. Kartik's loan account debited. And liability reduces, you got to debit. Kartik's loan account debit 12,000. But did we pay 12,000 for it? No, we paid 12,500. So how much money went out? 12,500. Children, when it comes to a loan alone, we'll pay it off. We'll not transfer it to capital account, even if it is a partner. Understood or not, my dear children? The journal entry for passing the settling the loan given by the partner is partner's loan account debit to bank account. Understood or not? For all the other liabilities, in the, whenever the partner has to be credited, we debit or credit the partner's capital account. But when it is loan, you pay it off. Understood or not, my dear children? So Kartik's loan account is only 12,000, but we paid 12,500 for that, which means there is a loss of 500, and all loss will be debited to the realization account. Understood or not, my dear children? So the journal entry here would be Kartik's. It's a beautiful question, my dear children. It explains two important concepts for us. Kartik's loan account debit, realization account debit, to bank. And that will be how much, my dear children? 12,000 was a Kartik's loan settled. He settled at 12,500, so 500 is a loss. So realization account will be credited by 12,500. That's it. So with that, we have come to the end of this problem also, my dear children. I'll meet you with another problem, another previous year journal entry based problem in another video. Until then, see you. Take care. Bye. Please share, subscribe, and comment and like. So many people are watching the video. Nobody presses the like button. I don't know. Anyway, thank you so much. Maybe they dislike. Okay, but yeah, who will dislike an accountancy problem? Everyone will dislike an accountancy problem. But when you're preparing for the board exam and if someone is helping you, make the video and helping you by solving it and all, nobody will dislike that part of the accountancy problem, I think. So kindly like if you like the video. Bye. Take care.